Two of your largest expenses throughout your retirement years are healthcare and, no surprise, taxes. So when is it best to do a Roth conversion on your tax-deferred accounts? I'm here with financial advisor 𝗦𝗨𝗕𝗦 of Premier Planning Professionals. Hopefully, he can help us all out a little bit. Bill, how you doing today?
Good. How are you?
Good, good. So can I ask you, when is it good to do a Roth conversion from those big tax-deferred accounts we've been saving into?
Absolutely. So, a lot of people don't understand the difference between a Roth and a traditional, and I like to kind of use the analogy. Imagine if you were, a farmer and you were offered the chance to pay taxes on your seeds or pay taxes on your harvest after you've planted them all. And you would probably want to pay the taxes on the seeds, right? And that's kind of how I relate the Roth. So you're paying the taxes on the way in and never paying taxes again after that. So not on the growth or the earnings. So it's a very powerful tool. To get into when you should do Roth conversions really depends on where you fit on the income scale, what tax bracket you're in currently, and how it affects potentially other aspects of the retirement phase you're in, whether you're on Social Security and Medicare with increased premiums, so on and so forth.
Yeah. And for a lot of folks, again, if you're also hearing this word Roth and you haven't before, so you're paying your taxes on the way in, that's because Roths haven't been around as long as the traditional, as we call it, or tax-deferred 401ks. The tax-deferred's been around since 1980. The Roths hadn't been introduced to Congress until Senator Roth brought it up in 1997. Do you even see that many Roth 401ks when you're getting folks who are coming into your office?
They're becoming more popular, and I give some tangible advice to, definitely if you have that option in your 401k to switch to the Roth contribution because it'll make a big difference when push comes to shove in the end. But yeah, there's not many out there.
That's a hard thing, though. And people feel about their money and what they know about it the same way they feel about bands, their sports teams, religion. You start to tell somebody, well, yours isn't quite right, and people become very defensive. The reason I say that is tax-deferred is the way that people like to save. It's the way that their parents saved. We've been doing that for 4.5 decades. Nobody wants to pay more in taxes. But with the Roth, you're saying maybe it's a good idea to pay a little bit more in taxes now rather than later?
Absolutely. So what's important to understand, it's not about eliminating taxes, it's about controlling taxes over time throughout your working years and throughout your retirement. So depending on what your income bracket is, that determines how much you may want to convert, right? To stay within the range of not bumping you up on the tax bracket.
Yeah, because I mean, going from, let's say, the 22 to 24% tax bracket, not necessarily a big deal, but going from 24 up into the 30s, now you're paying more taxes, right?
Certainly.
So, I was going to ask, but I think I'm getting there. Do you do a Roth conversion on the entire account? Or can you do little bits and pieces at a time?
Yeah, typically what we're doing is doing small portions of Roth conversion each year. For many clients, we do kind of a backdoor Roth where we're making contributions to traditional and converting the same amount out each year. So it's kind of like a VIG. You're getting the tax deduction on the way in, and then you're paying taxes on the way out, but converting all of your money to tax-free.
Okay. And do you work with people's CPAs? Do you have a tax tool? How do you determine? How do you look at people's taxes?
So I do work hand in hand with other professionals, CPAs, accountants, attorneys, so on and so forth. While we don't do individual tax returns, we do have all the tools and calculators to help do the strategic tax planning that I can then pass off to the CPA to implement as far as the actual tax return and documents go for filing.
Going through all of the work then, so let's say we do some Roth conversions, or maybe we're fortunate enough to have a few more years of working in us and we find that Roth 401k, we see how the numbers are going to work out. What again are the benefits of doing either the Roth conversion or using the Roth? Let's talk specifically about Social Security, RMDs. Is that different for the Roth accounts?
Absolutely. There's so many benefits of the Roth, right? One is it doesn't increase your taxable income when you're taking distributions. So therefore, you wouldn't have any increased premiums when you get to Medicare on your Medicare Part B, your prescription plan. They call it the 𝗬𝗓, income-related adjustment, monthly adjustments. You don't have to take out RMDs, right, like you do now at a traditional at 73. So you're not forced to go higher into income tax brackets. And a big one is in the end, on legacy, when your family or your beneficiaries inherit this money, they aren't forced to take that money in any allotted time or pay any taxes on that. So you get a true inheritance.
Bill, thank you very much. I learned a lot from it. Hopefully you did as well. But hopefully you also learned that you probably shouldn't be doing these Roth conversions without some sort of professional guidance over your shoulder. If you're going to talk to your CPA, great. Tell them that I'm looking to get into some of the lower tax brackets later in my retirement years. Or if you want to, reach out here. You can get started on your own retirement test drive, and that will include your tax analysis. You can do that right now by scheduling on the website down below over here, or you can also call that phone number and set up your time. Thanks for watching.